Hi Sathya, how are you today?
Very good, Sundar. How are you doing?
I'm good, man. It's very difficult to meet these days with a lot of these corona cases rising and all that stuff. So there are so many topics to discuss these days in terms of stocks or other asset classes. So shall we just toss a coin just to decide what we're going to discuss today?
What coin do you have? A 5 rupee coin or a 10 rupee coin?
No, Satya. See, I am referring to a much, much more valuable coin than a 5 rupee or 10 rupee coin. I have two coins with me, right? And we can toss either one of them. One is a gold coin, and the other is a Bitcoin.
Awesome. It's going to be very interesting today. So, are you leading that we're going to discuss about gold and Bitcoin today's discussion?
Yes, let's discuss both, right? Because this is very interesting. Because the new gen, the folks below 30 and so on, they're all their investments seem to be directed towards Bitcoin. They have seem to have a fancy for Bitcoin, and the way the Bitcoin price has skyrocketed, it's kind of surprised many people, and also a lot of big guns are supporting Bitcoins these days, including Elon Musk. But then gold has been a traditional value-based asset. So it will be interesting to see how this pans out, right? I mean, we're kind of it's kind of the old versus the new, if I can call it that. Yeah. So Satya, do you want to talk a bit about Bitcoin first?
Sure, Sundar. Yeah, let's start. I just wanted to give our listeners a brief history of what is Bitcoin, where it even started. See, the history of Bitcoin even started. If you look at the why it got popular, you can one school of thought addresses towards the anarchy movement, where people want to have a complete freedom against corrupt governments, are right. So the history took off in 2008, and you can always know what happened during 2008 2009, right?
Yeah, the financial
The,
crisis.
the financial crisis.
Yeah.
So a person name was with a pseudo name Satoshi Nakamoto published a Bitcoin paper and released the Bitcoin code somewhere. The Bitcoin code was released in Jan 2009, and 31st October 2008 was when he published the first Bitcoin white paper. And those days where there was a slight movement of occupying Wall Street and people want against corrupt governments and financial institutions. And they saw this Bitcoin as a fallback to this particular movement. And the way back, if you trace back their history, and he said that there will be total 21 million of Bitcoins will be issued, and there will not be governed by any federal central bank or any federal bank, and the issuance and the governance will be completely done by the network, right? But if you look at from there, from the way back in October 2009 till today, it has had a very interesting run. The first known trade for a Bitcoin happened in October 2009, where 1,309 Bitcoins were exchanged for $1. So you can quote somewhere around 0.003 cents of a Bitcoin per Bitcoin price. And in a span of from a 2009, in a span of 12 years, today we are close to 12 years. Today the value of Bitcoin is around $62,500, and which had with more than 1 trillion market cap, sir. So in a way, the history has moved in terms of acceptance among the people. You can attribute a number of reasons. Whether it could be because of people want to have that FOMO attitude, that fear of missing out. They want to have the ride of the Bitcoin, or you can even attribute towards fundamental. Or there is another interesting phenomena which where people call these days very interesting phenomena of people calling as stock to flow method of arriving the price of a Bitcoin. So if you really want to understand what is a stock to flow, you can equate with vis-a-vis a gold or a silver for that matter, right? So if you go back history of gold, there's a very interesting study which says that the price of gold is directly determined by the production which is done in a year, right? So it is called a method called a stock to flow model, So stock is something like the number of the reserves you have of gold, and a flow is something like what is the total quantity of gold produced in a year. So in a year, when the quantity produced is less, it is the price of the gold typically goes up, right?
Yeah, so in a way, it's like a scarcity premium, right?
Exactly.
If a commodity is scarce, it's much more expensive, and if its commodity can be produced much more, then obviously it becomes cheaper, right? So you are saying the same analogy holds true for Bitcoin as well.
Absolutely. So you're on the spot, Sundar. So if it's completely defined by the scarcity phenomena, and if you look at a stock to flow model of gold, it is something like 62, which means it'll take 62 years for the entire gold mine reserves to be available to consumption, sir. And interestingly, Bitcoin, the stock to flow is also very close to gold price, and it is close to 50 odd as of today when we're talking about, because the total Bitcoin scarcity can be issued in the market is only 21 million Bitcoins, of which close 18.68 million is already issued. So if you look at a stock to flow model, what can be remaining to be mined and what kind of number of Bitcoin which can be released in the market, the S2F model for a Bitcoin is also close to a gold premium, sir, right?
Correct.
So in a way, I can say, yeah.
In a way, this beats me, Satya, because gold is something that you can touch and feel. You know whether it exists or not from the ground, right? So any common person can look at it and say, yes, only so much is available, or there can be some surveyors who can actually do that. But I guess this whole technology scarcity premium comes from the actual use of technology and how it is actually mined. I mean, does one person have the right to do it, or can multiple people do it? So maybe we should get Siva in at this point to kind of discuss the technology behind it and how how that whole equation pans out. Hi, Siva. Welcome. We're very happy that you're joining us in this podcast.
Yeah, hi guys. Hi Sathya, hi Sundar, and yes, I'm glad to be here. I think you guys are doing awesome.
Siva, while we've just introduced the concept of gold versus Bitcoin, I have one fundamental question. How legit is Bitcoin? Is it a legitimate form of an asset that is kind of accepted across the board?
Okay, the going back a little bit to the history that I think Satya talked about. In fact, the origination of Bitcoin was to be a substitute as a legal tender to government issued currencies, primarily to protect against any kind of arbitrary, inflation, hyperinflation, and those types of concepts, right? So it was created as an alternative to your fiat currency, and it is fully intended to be legal tender. And the problem that they had to solve, which they had tried to solve when it come to any digital currency, was this problem of double spending. So fiat currencies and banking systems are there to protect against double spending. So if you are using a piece of currency on paper, it has got a serial number, there's only one of it. So you cannot use it in different places at the same time, right? And this was a problem that had to be solved when you don't have a centralized banking system, a clearinghouse, etc. Right? How do you protect against this? So it was this fundamental problem that Satoshi solved, and that sort of originated, or at least became a basis for Bitcoin and its underlying technology called the blockchain. But if you look at it, Bitcoin has still not become very prevalent because of a number of reasons. One of it, and foremost, is the governments that they are fighting against. So even if you take, India for example, it is not legal tender, right?
Right.
Government are still sitting on the fence what to do with it. The Supreme Court has at least temporarily squashed any attempts to make it illegal. However, they are still waiting for recommendations from RBI and the government around how Bitcoin should be regularized and how it can be used. So it is not legal tender yet.
I think a lot of governments, especially even the Indian government, are proposing their own version of cryptocurrency. They're saying the RBI will launch its own cryptocurrency, and that will be perfectly legal from the government standpoint. So you don't get into trouble when you own that cryptocurrency vis-a-vis, owning Bitcoin, or at least that's the perception now.
So, Shiva, we often hear about this terminology called miners in Bitcoin, and every time you solve a block, you get reward in terms of Bitcoin. So, are these guys same as somebody who is in a gold mine with an axe in the hand and a yellow hat? What are these guys miners are?
Okay. I don't know whether they wear hats or what color it is, but more or less, the word, in fact, minor is being used so that we can relate to that same idea, right? So, just like as in gold, which is not easily accessible or available, you will have to go and use certain rigs and through which you can extract and distill and get the gold metal out of that rig. Same concept actually applies here, with a small difference. So bitcoins, how do you get bitcoins? There's primarily only one way you can get bitcoin, which is by solving a certain mathematical problem. Okay, I'm trying to keep it as simple as possible. So why do you want to solve a mathematical problem? You have to solve a mathematical problem in order to verify a set of transactions that has happened in the Bitcoin world. Just moments ago, I talked about how in the non-crypto world you have banks that clear payments and settlements. So the transactions are validated by all these intermediaries for which they charge you some fees. In the case of Bitcoin transactions, there is no central intermediary, but there needs to be somebody who says, yes, this transaction is valid. And when they do that, you have to give them some commission in exchange for doing that validation. In a way, it's kind of how banks work, right?
Okay,
So
okay,
this is
understood.
what miners do. So miners are basically all trying to validate transactions. So the way it happens in the Bitcoin world is instead of validating one transaction at a time, they group a whole bunch of transactions and put it in what they called as a block. And a block of transactions, once they are validated, they become part of a chain, which is called the blockchain.
Understood. Okay,
And every
okay.
time somebody successfully manages to do that, as a reward, as an incentive for doing that, they get some Bitcoin. And that's how Bitcoins come into circulation.
At a very simple fundamental level, if I have to actually solve that mathematical problem and get a Bitcoin or whatever number of Bitcoins in return, what do I have to do? What is the skill set or the expertise, or what is it that I need to have to be able to do that? Can anybody do that?
Well, anybody can theoretically do that. It is not any person doing it. It's actually a computer system that is doing it. And the the mathematical problem is not it's not a complex problem in itself. It is basically a guessing a number problem. All it is guessing a number. Okay, and but in order to guess the right number, you have to make a trillion guesses a second.
Oh, okay.
So, and if you keep on guessing, at the level of difficulty that is there, it will approximately take you about 10 minutes of guesses to get it right. So what people have done is, instead of you and me and Satya trying to do this on a computer, which will take forever, people have created mining pools. So hundreds of guys join together, they become a pool. All of us have some very high-end hardware, and all of us are making guesses. So if one of us in the pool gets it right, we all divide up the reward. If you did it all by yourself, according to the mathematics of this,
Hmm.
it would, for you to even be successful with just getting one block, which is one, right now it is about 6 bitcoins you will earn, which is roughly 60,000 each, right? So you can earn about 6 bitcoins after 16 years if just you yourself operate it.
Wow.
So
That's definitely not worth my while. So
Exactly. So that's not the way you're going to be able to make money. But if you're joining a mining pool, there is a much better chance. But of course, when you do that, your portion of that reward is going to be significantly smaller.
okay, thank you, Shiva. That gives us a complete perspective about whether it's worth to be a miner. Because before even Sundar asked a question, I was even thinking that I can become a miner and earn crores. Now I can understand how many years it will take for me to earn whatever it is. All right. Okay. Now, Shiva, the point, the biggest puzzle I have is that people talk about there are more than 6,000 cryptocurrencies. The number keeps floating around, right? 2,000 or 6,000 cryptocurrencies. And what we are familiar is with names like Bitcoin or Ether or XRP from Ripple. But what keeps puzzling me is, can I even start my own cryptocurrency saying that, hey, Satya.crypto, and what stops me to doing it?
The only requirement, really, there are only two requirements. One, of course, you have to be able to code, because this is all computer code here. There's no yellow metal under the ground. So you have to be able to code, and that code has to serve a certain functionality that a bunch of people are interested in. So if you take again the examples that you gave, if you take Bitcoin for instance, Bitcoin was created as a medium of exchange without any central authority. So that's what it was created, and it got traction. For instance, if you take, we talked about Nano, you talk about Ripple, those were created primarily to be used as payments without any cross-border payment fees, because that is one of the drag of the current system. A lot of the money goes in fees, transaction fees, intermediary fees. So if you can create a currency, Satya.crypto, and it has a specific purpose in mind, and you can get some people to buy into it and start using it for that purpose, then certainly you can have your own cryptocurrency.
But what I you've not, maybe I don't know whether we have an answer at this point. There are 6,000 cryptocurrencies. Should I look at everything, or should I look at what should I look at? What should I, just like there are so many 5,000 stocks available for me to trade, there is a way I look at a stock. So similarly, should I way, is there a way that I look at a cryptocurrency?
Yes, absolutely. I mean, there are exchanges today that are through which you can purchase these cryptocurrencies. Coinbase is one of them that is, in fact, going to go into IPO as we speak. I think it's tomorrow. They're going to become as legitimate as any other, company. In India, as you guys know, one of the startups called Wazir got acquired by Binance, which is again a number two or number three exchange. So these exchanges have come up, and they allow you to buy into different cryptocurrencies. Now, which currency do you choose is your question, and I think you would have to apply the same kind of due diligence you would do in the case of equities, right? Just like you look for a company's health and the books of the company. In the case of crypto, you want to look at primarily its usage, primarily its legitimacy, its history, and the institutions. If you look at Bitcoin today, a lot of institutions have bought Bitcoin, and like Sundar mentioned, Elon Musk is even saying you can pay for a Tesla using Bitcoin. So you look at, and Ripple is another one that you mentioned, which has gotten decent amount of traction in the industry institutions. So you would look for those things as an investor. But if you're going to do play crapshoot, then I guess you can basically pick anyone and hope to get lucky.
Okay, okay. Thank you, Shiva. This makes a very interesting case for Bitcoin. As we're running out of time, we will cover about gold in our next episode. As an investor, how one should look at gold as part of the portfolio, and whether Bitcoin or any cryptocurrency is it even poised to replace gold, which is a common popular topic in these days in the investment world, or Bitcoin is another bubble which is waiting to be burst. Tune in, and we love to listen from you. Please write your comments in the comment section below or write to us at help@alphabeta.io. Thank you guys.